Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day.
What the world needs now is people who see energy a little bit differently. Because seeing a more sustainable world isn't far in the future. We're building it now. GE, building a world that works.
What do the fourth quarter results for FY22 so far have to say about the state of play of India Inc.? Going ahead, what can investors expect in terms of corporate earning growth and the performance of mid and small cap stocks? Let's find out.
Reliance Industries on Friday reported a 22.5% year-on-year growth in its consolidated net profit to 16,203 crore rupees for the quarter ended March. In the corresponding quarter of the previous financial year, it had reported a net profit of 13,227 crore rupees. RIL's consolidated revenue from operations jumped 36.8% YOY to 211,887 crore rupees for the reported quarter. The oil to telecom conglomerate also reported a record annual consolidated net profit of 67,845 crore rupees for the financial year. There have been more instances of corporate results beating estimates than missing them during the Q4 FY22 earnings season so far. This was the finding of a recent ICICI Securities Limited report. Thus far, the bulk of the results declared in Q4 FY22 have been from commodity consumers, such as industrials, auto, and consumption, along with services such as financials and information technology. According to the report, while the impact of commodity prices was relatively less on the services sector, it has its own cost challenges, such as the high attrition rates at IT companies. The report highlighted that instances of corporate results beating estimates have exceeded the misses within the NSE 200 universe and particularly so in the mid-cap space. As on 4th May, most commodity producers were yet to announce results, especially from the oil and gas sector. The report said that they could likely tilt the scale further in favor of more beats than misses going ahead. It indicates that commodity consumers would continue to feel the pressure of rising input costs in subsequent quarters. A variable to watch would be the continued ability to pass on the inflation, which in turn would be a function of the demand environment. So far, the Q4 FY22 results have indicated that the mean reversion of aggregate corporate profits, which began from the decadal low point of FY20, was intact. The ICICI Securities report expects corporate earnings growth to beat nominal GDP and act as an inflation hedge. On average, corporate profits are expected to grow in the range of 15% to 30% over FY22, FY24E. The Nifty 50 is likely to grow at the lower end of the range. Meanwhile, higher growth will emanate from the mid and small cap stocks. The report said that the higher growth would be attributable to the larger impact of COVID on the mid and small cap space and the rapid reopening of the economy, which was likely to show higher growth on a depressed base. Jyotivardhan Jaipuria, founder and managing director at Valentis Advisors, said that near-term earnings could see some margin pressure and some downgrades as high commodity prices cannot be passed on immediately. However, he added, this would benefit commodity producers which have an equally large weight in the index. Hence, overall earnings downgrades might not be high. Jaipuria said, for sectors like cement and other home building sectors, when near-term earnings would be under pressure due to the spike in commodity prices, the fall in share prices offered investors an attractive entry price. The financial sector, where Valentis was underweight during the COVID crisis, was headed for better days, as the economy was recovering and a lot of the NPL provisioning was behind us. Jaipuria also said that while auto was an underweight sector too, things stood close to the bottom of the cycle and the sector could see sharp earnings growth over the next few years, especially as the chip shortage eases.
As of now, the demand destruction that has not yet happened. Because if I just give a color, say demand destruction has, inflationary led demand destruction has already happened in Europe and UK, wherein the buzz of recession is quite strong out there, which is quite visible. But the same thing, which is inflationary led demand destruction in India or the US, we have not yet seen that. It's a little early, because I think even the companies, when they are reporting numbers or even the commentary which they are giving, it's primarily focusing the volume growth, the revenue growth will be there, but on the margins front, they are still there is uncertainty which is there. There has been a price hikes, but eventually it's they have to take a further hike in the month of May, and that is basically the situation right now. But apart from that, even the companies which has reported weak set of numbers, there has been a top line growth. It looks like as of now, we will end this quarter with the maybe in line at an index level, or maybe marginal earnings cut will be there at an index level I'm talking about. If you look at 15% kind of earnings growth, as of now, the risks are on the downside, probably as we move ahead. And all eyes are on the inflation, how exactly this particular data pans out. In terms of the GDP growth rate estimate, which we all are working, it's ranging from 7 to 8 odd percent. And with that in background, and I think it looks like double-digit growth rate for Nifty will be still be there in the market. So still, I'm hopeful for a double-digit earnings growth for Nifty 50.
India Inc. is confident of sustainable growth in corporate profits due to low leverage effects, the earnings beating estimates, and the nascent signs of an improving investment cycle.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Among instances of corporate results beating estimates in the fourth quarter, Tata Consumer Products reported strong operating performance led by gross margin expansion during the period. This was despite volume softness in certain commodities. In a recent interview with Business Standard Charlene D'Souza, Tata Consumer Products MD and CEO Sunil D'Souza shares his strategic roadmap for food and non-food businesses. Listen in.
To start off with, can you explain in the India market, your food business volumes were impacted. Now, what is the reason behind the same? Is it due to inflation?
So, Charlene, let me split the India food business into two pieces, right? The India food business is composed of salt, which is our, business which we've been carrying forward. And there is a set of businesses which are building going forward, which is Sampann, Soulful, Ready to Eat, all that comes under the India food. Salt was slightly soft this quarter in terms of volume, but you have to remember two important things. Number one, we are cycling a Q4 of last year where volumes grew by 21%. So it was on a very high base. The other reason for the volumes a bit of softness is on salt, we've been seeing significant inflation come through, and we have taken significant amount of pricing over the last 9 months. So we've effectively moved from 21 rupees a kilo end of June to April was the last, latest increase that we've taken, where we moved to 25 rupees a kilo, right? So there's been a 19% increase. And every time in salt, historically in this category, the minute you take up pricing, the channel downstocks. On all the other businesses, I think volumes are doing well. In fact, Sampann by value grew about 30% in last quarter. Soulful is starting from a zero base. Soulful it took some time for us to integrate the business. But in the last 2 or 3 months, it's been growing at triple digits. Said every time we've taken up the price increases, we see a little bit of softness. I would think it will come back in this quarter.
You've had very good margin performance in the quarter when the rest of the sector actually has struggled with margins. Actually, they've either managed flat margins or it's that bit under pressure. Can you please explain how you've managed this kind of performance on the margin front?
Number one is the fact that the three big categories that we have, or the three big commodities that we buy are coffee, salt, and tea. For us, apart from salt, where we might still have small movements, most of the commodities, whether it is coffee or tea, are looking to be range bound right now. And therefore, we've taken corrective pricing actions as we've seen in the last 6 to 9 months. The spike in commodities has, luckily for us, has happened in commodities which we are not overtly reliant on. Number two is making sure that execution and volume growth continue. The volume momentum continuing despite taking price increases, I think this is the other piece which has helped mitigate margin pressure. The only thing I would leave with is the inflation that happens on freight, logistics, packaging material hits me as much as any other FMCG player. And there we'll have to do some puts and takes to make sure that we're sort of steadying the boat as we go forward.
In your international markets performance, especially in tea, there's been pressure. I agree. You've pointed out that there's been mobility has increased in these markets, and that's why out-of-home consumption has picked up. In-home consumption has actually taken a hit. But what is your strategy from here on to improve at least black tea consumption in these markets?
For the international markets, I would split it again, Charlene, into 2 or 3 different pieces. Yeah, we've got a coffee business and a tea business, right? Yes. The US is completely coffee. So roughly, I would say about half of my business is coffee, or maybe 45% of it is coffee, and the balance is tea. Now in coffee, we've broadly about stable market share, and we've been taking pricing up in line with coffee prices and with the rest of the industry to put margins back on shape. And coffee prices, like I said, are broadly range bound. So now it will go back to driving volume through execution. I think the bigger opportunity for us is in driving K-cups versus bags in the US. So that's one piece. On the tea front, again, broadly the tea market has normalized, and the trends that we are seeing is broadly what used to be pre-COVID, where black tea is sort of, I would say, flat to slight bit of a negative, but the growth still happens in fruit and herbal and specialty. The big thing that we're doing in international is we're following the 3-brand strategy, where whether it is in the UK or in the US, we're putting Tetley, Good Earth and Tea Pigs under the same portfolio and starting to expand. While we sort of build up brand image and improve execution, including promotions in Tetley and black tea, I think the big growth opportunities are in the fruit and herbal and specialty, and that is where we are focused.
Starbucks, I think, had a strong opening of stores in the previous quarter. Will this continue for you going ahead?
So let me put it this way, Starbucks for the full year, we opened 50 stores, out of which 23 opened in the last quarter. Now, it is not that 23, all of them, the work started from zero and everything finished in the thing. Remember, for a significant portion of time, we were either not allowed to work or did not want to work. I would say the background work was done to a large extent in many of those stores, and it was just about doing that final dash and getting the stores open. Going forward, we have ambitions of accelerating store growth in India.
In the Indian market, your modern trade contribution, if I'm not mistaken, has crossed 1,000 crores as stated in your presentation. Quick commerce, if you could touch upon that, and even in the previous quarter, you talked about D2C brands and launching more D2C brands. If you could give me an overall view on how the modern trade and the e-commerce business for you is evolving at this point in time.
So modern trade for us grew at 30% year on year and has crossed 1,000 crores right now, right? And especially in our new launches or new businesses, whether it is Soulful, whether it is Tata Q, or whether it is Sampann, in all of them, we are seeing disproportionate share and volume growth in modern trade. I think modern trade, the catch is to make sure we can execute much better and continue to drive the momentum. The fact that the consumer still continues to shop online despite modern trade opening, Kirana's opening. So 7.3% is what we exited our e-commerce contribution, and it continues at that level. Now, the challenge is move it to a 10% for us, and that's what the team is working on.
Okay, thank you so much, sir, for your time, and all the best, sir, for the next financial year.
Thank you. Thanks, Charlie. Thank you.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Tata Consumer Products posted a strong operational performance in the fourth quarter of FY22, but rising bond yields and anxiety ahead of Q4 numbers kept the market action subdued last week. However, D-Street experts expect the upcoming trading sessions to be volatile for equities as earnings season takes off in full swing, with no ease in global headwinds. Our next report offers a lowdown of all that will shape the market's trajectory this week.
Global equities, including Indian, tumbled last week as central bankers embarked on the journey on interest rate hikes. As anticipated, the US Federal Reserve Chief Jerome Powell announced a 50 basis points rate hike in May policy meet, while the Bank of England raised rates by 25 basis points. However, what surprised the domestic equities was the out-of-policy 40 bps repo rate hike by the Reserve Bank of India. It also increased the CRR limit by 50 basis points. Equities are now battling fears of record high inflation, dented prospects of corporate profitability, and likelihood of contraction in economic growth. Besides, the ongoing Ukraine war, COVID-19 related fresh restrictions in China, and select disappointing corporate earnings took their toll on the markets. Eventually, the S&P BSE Sensex ended the week with a heavy loss of 2,226 points or 3.9%. The NSE Nifty 52 plunged 692%, its biggest weekly fall since late November 2021. However, as we sit near 2-month lows, investors are wondering if the market has overreacted or is there more pain ahead. Let's go to market analyst VK Vijay Kumar to know the road ahead for the markets.
The excessive volatility, particularly the weakness in the market, is a reflection of the nervousness in the market. The most important single factor roiling the global markets is the increasing inflation globally. The markets are not sure, the markets are rather skeptical about the ability of central banks to contain inflation. Perhaps more aggressive monetary tightening than is expected now may be warranted to contain inflation. That's why the dollar index is at 104 and the 10-year bond yield in US is above 3%. This weakness in the market, correction in the market need not be seen as an overreaction in the market. Perhaps it is a rational response, because even now valuations are higher than historical levels, whether it is in US or in India. Investors need not rush in to buy aggressively at this point of time, because there can be further dips in the market. The Nasdaq is at a 1-year low, and the S&P 500 is again approaching a 1-year low. These are bearish indicators. But of course, there will be opportunities to buy quality stocks. Dips like what we are witnessing now may be used to buy high quality stocks in a calibrated manner, not aggressive buying in large quantities. Investors can buy high quality stocks in installments in a calibrated manner. Preference can be given to value stocks over growth stocks. The successful IPO by LIC can bring some cheer to the market, to investors also. It can bring some cheer, but that alone will be insufficient to improve sentiments in the market.
As pointed out, the near-term outlook remains volatile as investors remain skeptical of central banks' ability to tame inflation. As regards this week, shares of Asian Paints, Cipla, GNFC, Tata Motors, Larsen & Toubro, Siemens and Vodafone Idea, among others, are likely to be in focus as the companies are scheduled to announce their March quarter results. Meanwhile, the primary market will be buzzing with activity. The mega 21,000 crore rupees LIC IPO received an overwhelming response from retail investors. The IPO was fully subscribed on the day 2 of the offer period itself, despite the broader market weakness. The issue closes for subscription today. The listing is likely to be on May 17. Further, Prudent Corporate Advisory Services and Delivery IPOs will open for subscription this week.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In a recent interview with Business Standard, Praveena Rai, Chief Operating Officer of National Payments Corporation of India, had said that the aim was to take RuPay to everyone, be it debit, prepaid or credit cards, and serve the entire population. That's an ambitious goal and will take time to reach fruition. In the meantime, let's understand what exactly RuPay is.
A product of the National Payments Corporation of India, RuPay is India's indigenous payment network. The name derived from words rupee and payment indicates that it is India's own initiative for card payments. It is the country's answer to international payments networks. Initiated by Reserve Bank of India, the Financial and Payment Services System was launched in 2012 and subsequently dedicated to the country in 2014. One of the intentions behind RuPay is to facilitate India's entry into the global payments market through an indigenous card facility. So why was RuPay launched? RuPay is meant to fulfill RBI's vision of creating a less cash economy. An effective way to achieve that was by ensuring every Indian bank and financial institution becomes tech-savvy and offers electronic payment services. Building a less cash economy calls for financial inclusion. To this end, RuPay helped reach rural India and promote digital payments with the Pradhan Mantri Jan Dhan Yojana. As of November 2021, banks in India had reportedly issued 316.7 million RuPay debit cards with free accident insurance cover to Pradhan Mantri Jan Dhan Yojana account holders. In the absence of a domestic payments network, banks had to pay high affiliation charges to multinationals like Visa and MasterCard for trusted associations. As a result, NPCI was set up as a non-profit payments company that would build an accessible and affordable payments network for Indians. And what are the products on offer? RuPay has both debit and credit cards on offer for individuals and corporates. It also has a prepaid and Kisan credit card as well. It also offers a contactless card that facilitates transactions with a single tap, thereby making payments without revealing crucial card details. But as a customer, you might have two crucial questions on your mind. First, where are RuPay cards accepted? According to a Financial Daily, as of August 2021, they were accepted at all ATMs and POS machines, and also for domestic online and offline shopping across India. However, internationally, they are not accepted except those ATMs, POS machines, and e-commerce sites where Diner and Discover Financial Service are enabled. At the time of the report's publishing, cards under RuPay Global were accepted at more than 1.9 million ATM locations and more than 42.4 million POS locations across 185 countries. Secondly, what are the advantages of a RuPay card? Banks that issue RuPay cards enjoy an advantage because they don't need to pay network registration fees, unlike in the case of MasterCard or Visa registration. This is because RuPay is a domestic framework. Thanks to a zero merchant discount rate, banks charge nothing on UPI and RuPay card transactions.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Data from NPCI shows that in 2021-22, RuPay card usage at POS terminals increased 27.2% to 1.5 trillion rupees compared to last year. E-commerce transactions, on the other hand, had only witnessed a 4.2% rise. That's all for today. For more news and analysis, log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.